was also intercepted. And NBC News reporting that that package is linked to the 4 explosions that have taken place earlier this month in the Austin area. We're expecting some updates on that. Also, more color on this financial quarter and trade, tariffs, tax reform, and of course, peak season numbers when the conference call comes up. That starts at 5 p.m. Eastern. Back over to you.
Company involved in every aspect. Morgan, thank you very much. Morgan Brennan, shares still up about 2%. Mike, anytime a blowout you see on the bottom line, the first question is it comparable?
Right, and so lots of sort out there as Morgan went through the kind of variable kind of one-offs in there. I do think the stock, though, it sort of gave you a chance to get in at not a crazy level. It went from 225 to 275 in December and the first half of January. It was just a wild move. Pull back, so now it looks like it might try to firm up at this level.
Yeah, about 257 is where we are on those FedEx shares at the moment. There's more coming up on that call. Google announced the launch of its Google News initiative earlier today. It's focused on fighting misinformation and growing revenue for news organizations. The tech giant plans to commit $300 million to the initiative over the next 3 years. Appearing on the halftime report earlier this afternoon, here's what Google's SVP and Chief Business Officer Philip Schindler had to say about the timing of the initiative.
I'm very optimistic. I don't think we're too late at all. We're actually all in. I'm very optimistic.
Google's YouTube also announced tighter policies on its gun-related videos. It's going to prohibit videos that sell firearms and teach viewers how to make their own guns. And joining us to discuss this is David Chavern. He's president and CEO of News Media Alliance. Thank you for joining us.
Great, thank you for having me.
So this is one of those weeks that really puts a spotlight on the problem that we have with differentiating good sources of information from poor ones. What is this ever going to do?
Well, these are a set of really pretty good and pretty serious proposals. I mean, there's a whole range of things. The things we focus on is subscription, a way to subscribe through Google for publishers, news organizations, giving higher priority to news from authoritative quality sources, a whole range of technical tools to try to identify fake news. I mean, those are all good things. You know, frankly, I represent news publishers, and until we see actual return and actual economic return for real quality journalism, I'm going to temper my enthusiasm. So I'm not going to be too jumping up and down. But it was good. It was serious, and I think they are, in their own way, trying to take on a set of very difficult problems.
You know, we've been talking obviously about Facebook so much the last couple of days, and the Summit made the case. I believe Nate Silver made this case today, saying that whatever Cambridge Analytica might or might not have done, perhaps there was a lot more influence related to the way the news feed itself would privilege more provocative or outlandish type content. Is there any way to try and sway how these algorithms operate so that real news is more privileged?
Yes, I mean, it's their rules. I mean, if you think about it, Google and Facebook have created these rules to do a number of things, most particularly help their businesses. And I'm not criticizing.
No, but that's the point. It doesn't seem to be in their interest. Every time they've tried to tweak it in the past to say, oh, this is more viewers like, I'm bored, you know. But hey,
doesn't get scared as much.
Right, that crazy story over there about, you know, whatever wacky thing is probably fake news, unfortunately, has been. Do you think regulatory pressure makes them change that?
No, you know, in the algorithm, they can give higher priority to news that's actually coming from people who employ reporters. I mean, you could start there. How about people who actually pay reporters, give them a higher priority?
And
right?
Gordon Kravitz, they have this initiative now that's going to help try to assign some kind of almost like a star rating system to news sources. So maybe at least when you see something in front of you, you can say, hey, this is, you know, either a top or a bottom rated kind of organization.
Exactly. And they have to address this problem because news is an unusual kind of content. It's important. The joke I always tell is that nobody's asking for congressional hearings about fake cat videos. Okay? That the news is important politically, it's important to society. If you screw up the news business, you screw up our civil society. And they're beginning to realize that they have to do things, even hard things, even things that aren't in their immediate best interest to help address the problem.
And we hope the news business can be monetized before it goes away completely. It's more important than ever. David, thanks for joining us.
Thank you for having me.
David Chavern from News Media Alliance. Oracle, the worst performing stock on the S&P today after its weaker than expected cloud service revenue. Remember those results last night? The fast money traders are going to tell us whether they're buying on this weakness coming up. But first, Jeffrey Sonnenfeld weighs in on how the Facebook data scandal could impact CEO Mark Zuckerberg's future at the company. right after this. Welcome back. It's a breakup for FANG. The stocks are going in two different directions. You got Facebook and Google losing market share this week in particular, while Netflix and Amazon gain. Take a look at the market caps. Facebook started the year around $510 billion. You can see that in the left-hand column there. Today it's dropped to about $480 billion. It's lost $30 billion. And it's kicked off 2018 for Alphabet near $730 billion, and it's dropped also by about $30 billion, $750. Netflix started at $83 billion, but look, it's going the other direction. Netflix and Amazon, here's who's benefiting. Netflix has added $50 billion of capital.
Netflix has added like a 21st Century Fox to its market cap this year.
Unbelievable. I'm sure that really hurts 21st Century Fox right now, too. And Amazon, you can see there, look at this, has gained $200 billion in market cap from 563 to $763 billion.
Yeah, it's amazing.
I mean, so we're talking about, I mean, relative to where we started, Matt, we actually have seen quite a difference in how the market is placing these companies. And exactly. The FANG is, we're going to have to stop calling it FANG.
So what's the scheme that that the market is kind of following here? It looks like, well, Netflix and Amazon, they're not advertising supported principally. People buy the product, they pay cash for it, they know what they're getting. It's not about auctioning eyeballs to advertisers, which is what Netflix and Alphabet are about. So I don't know that the market is correct to say that these are the trajectories that they're going to be followed for a long time to come.
Right.
I think it's a reevaluation of just how wonderful that ad-supported business model is right now.
Yeah, big reevaluation in Amazon's case in particular. And as the market share of Facebook and Google drops, my next guest says it might be time for Facebook founder and CEO Mark Zuckerberg to step down. Joining us is Jeffrey Sonnenfeld, Senior Associate Dean for Leadership Studies at Yale and a CNBC contributor. Jeff, you know, does he need to step down or does he need someone else to just step in above him?
He needs to face up to the Facebook realities, which they're not doing. This is basically Facebook's Frankenstein monster that they have to confront right now. And they, it's going to be hard to remove him from office, and he's surely not going to voluntarily step down. As of last April, he still controlled 60% of the stock. And this is something like he and Jack Ma and President Xi Jinping and President Putin and, you know, in this emperor for life model that they have. It's very hard, but there are problems with these Emperor for Life models, as we have seen with Papadoc Duvalier or Fidel Castro, is that sometimes the Dragon Slayer early career can start to resemble the Dragon themselves late career, and there's got to be some accountability here.
Mike?
Jeff,
one thing they could do is
comparing it to some of the villains of history right now. I just wonder if you were firing Mark Zuckerberg for cause right now, what is that cause? What do you say to him?
Well, you know, the villains of history, for the most part, started out as redeemers. They were saviors, and they became villainous only by late career. And I'm not calling him a villain, but somebody with unchecked power, as this guy has. He's not accountable to anybody. This was the advice he got from Steve Jobs, since, as we all know, Jobs was pushed out of his own creation, is to not let that happen. Jack Ma did the same thing, and it's very dangerous. This board, they're silent. Where are they? Is it because Peter Thiel is on the board? Peter Thiel, of course, very close to the Trump campaign, a major Trump supporter, and a big backer here and a board member, or is it because of the Russian Ukrainian founder of WhatsApp on the board? You've got to wonder what's going on here that the board is not exercising more control. What did he do wrong? There's rampant misconduct, probably Federal Trade Commission violations, and this Cambridge Analytica had gotten access to this data through reckless misconduct of 200,000 files forked over for this specious psychological research.
Right, but Jeff, so when
50 million
Facebook
people
says, hey, we're the victim here, and we are the victim of a third party and Cambridge Analytica misusing this data, are they lying?
They are being fast and easy with the facts. They had uncovered this misuse in 2015 and didn't do anything about it. They didn't even audit it. They just complained to Cambridge Analytica. Where was there any evidence that they made some due diligence, some effort to show there's some compliance with their already too loose a scheme? Federal Trade Commission had already wrapped them on the knuckles for this before. They didn't show any contrition. They didn't show any preparation for it. So no, they're not a victim.
Jeff, so
they are an unwitting co-conspirator.
One quick example of the right kind of person to come in at this moment. Who do you think that would be?
Well, on the board, they have Ken Chenault, who's got some time freed up. He's a very honorable, brilliant former CEO, of course, of American Express. On the board, they also have Erskine Bowles. There are things that they can do, but Mark Zuckerberg is not accountable. He doesn't go before the public. Where's the Miss Lean in Sheryl Sandberg? Well, she's not leaning in at all here. They're hiding. They're throwing up lawyers. They should show some accountability. He sold more stock than the whole rest of the technology industry combined these last 3 months.
Jeff Sonnenfeld not happy with Facebook. We'll see if any of these changes do result from all this. Jeff, thanks for joining us.
Thank you very much.
Let's take a look at how we finished in Wall Street today. The Dow was up 116. Small gains for the S&P and the NASDAQ as well. Not doing much for the NASDAQ to erase yesterday's 2% drop, and the Russell 2000 was fractionally lower on the bell. It is time for a news update at this hour with Sue Herrera. Sue?
Hello, Kelly. Hello, everyone. Here's what's happening at this hour. A school shooting in Maryland today, ending with a school resource officer shooting and killing the gunman. Authorities say 17-year-old male student Austin Wyatt Rollins shot two students, one of whom is in critical condition, the other is in stable condition. And the brother of Florida school shooter Nicholas Cruz was in court today. Zachary Cruz has been charged with trespassing from visiting the school where his brother killed 17 people. He had been told to stay away from the school. A judge setting his bond at $500,000. Usually, trespassing carries a $25 bond. And the Northeast is getting ready once again for a springtime snowstorm. Washington, Philadelphia, Boston, and New York City all in that storm's path. Some areas could get more than a foot of snow. And the Toronto Blue Jays catcher Russell Martin has a run-in with a net during spring training. Take a look at that. Whoops. He got tangled in that net while chasing a foul ball. And to add injury to insult, as he tried to get up, the net fell on him. The metal pole hit him in the head. He says he was okay. I don't know. Looks like, oh, geez. He laughed it off. However, I think he should have just kind of given up at that point. That's the news update. Hopefully today's a better day for him. That guy,
spring training, they just leave stuff out on the field, you know.
Obviously, yeah.
Care taken there.
Perilous. Holy cow. Sue, thank you. You get the cleats tangled up in the net, right? Because the baseball, are they spikes or are they just more like a soccer cleat?
No, they're called spikes. Metal spikes.
Oh, yeah, that could be nasty. Oracle having its worst day in 5 years after disappointing cloud sales. Up next, we'll get the fast money trade on whether to buy this almost Welcome back. We were speaking a moment ago about the market caps of FANG this year and some of the big changes underway. Our graphics correct. I just want to make sure I spoke correctly about this. Google's market cap has actually increased this year, Michael.
It is up year to date, yes. It's just down about 3.5% this week and has underperformed Amazon and Netflix by a lot.
Yeah, there's the number, 763, started at 729. So only Facebook has actually lost share, but you can see the huge gainers here in Netflix and Amazon. Moving right along. Breaking news on Salesforce at this hour. Josh Lipton, what's going on there?
That's right, Kelly. Some big news from Mark Benioff's company. Salesforce has signed a definitive agreement to acquire MuleSoft. The price tag here, Kelly, is $6.5 billion. MuleSoft, a platform for connecting applications. Its customers include everyone from Coca-Cola to Barclays. MuleSoft, they say, is going to power the new Salesforce integration cloud. Mark Benioff saying in a statement that Salesforce and MuleSoft will enable customers to connect all the information throughout their enterprises across all public and private clouds. But again, this news is crossing, Kelly. Salesforce buying MuleSoft for $6.5 billion. Kelly, back to you.
Yeah, MuleSoft's up 3.5%, but they were up big in the session today when Reuters reported these talks were underway. Josh, thank you. It's official now. And let's get to some of the other big stories in our rapid recap.
Facebook under fire. The fallout grows from that massive data scandal.
The Verge is reporting that Facebook will hold an emergency meeting with employees later today to discuss the fallout.
This is about power. And when you have too much power, this is what happens, okay?
We are unbelievably outraged and beyond disturbed at the allegations that data was misused or that our policies have been violated.
With data, this is going to be an opportunity of our lifetime, but it can be an issue. And this responsible stewardship of data, there's nothing a company can do that's more important.
House Speaker Paul Ryan says they will meet the Friday deadline to avert a government shutdown and that no additional stopgap funding measure will be needed.
Saudi Crown Prince is visiting the White House today.
Your Royal Highness, should the president pull out of the Iran deal?
Well, we'll talk about that.
Dow going out with a more than 100-point gain. We're a little off the highs. Looks like we're up about 119. Haven't made it back to 25,000 though. And Oracle took a big leg down today. It was closed lower by nearly 10% after disappointing earnings after the bell yesterday, specifically weakness in its cloud business. Joining us now with more, our fast money traders, Tim Seymour and David Seaberg. Welcome, guys. Tim, I mean, this was a big drop for Oracle for a company. Is it because its competitors seem to do so much better, or this is the most sensitive part of the fast-growing business, right?
Yeah, look, where's the cloud? I mean, if you think about it, this is a company that was, by many guys on the street, consensus had them growing roughly 32, 33% on the cloud. They come in at 21. They come in at the low end of the range. They guide at the low end of the range. The on-premises business, which in the past couple of quarters has actually really saved this company, was also weaker. So when you look at where this company is, I don't think this is typically that buy that you normally are buying in Oracle. Actually, when they reported, they've had a lot of volatility in those numbers. This is not what I would be buying. I don't see why this turns around quickly. And again, a lot of people felt this was a big cloud play. They're throwing it in there with Microsoft and other guys. I'm not sure you can do that just yet in a major way.
David, how does it look to you in terms of investor positioning and everything else? Obviously, there was this theme of some old tech reinventing itself. It's worked its way through Cisco. It's worked its way through Intel. Here you have this stock right back toward last year's lows.
Right. No, I mean, it's an excellent question. I mean, position going into the quarter was expectations for a good quarter. So I think very long bias going into last night's earnings. So therefore, I think a lot of it came out. They purged, out of those positions. So I think the setup right now is actually very interesting. I look at it from a trading perspective, not a long-term investment here. From let's say a 3 to 6 week trade. I think it's a perfect opportunity to jump in. You're looking at some of the orders that we talked to some of the clients that we're dealing with. It seems that some of the larger orders were pushed out to Q4. I think the setup from a valuation perspective is very cheap where they're trading right now, and I think a large cap value manager will jump in at these levels and say, I want to buy some. So the setup to me is good for a trade.
But it's still interesting. Tim doesn't like it. David, you're only thinking 3 to 6 weeks.
It tells you 6 weeks. That's how we make money.
I know, but it tells you how these prospects have dimmed after this result. And thank you both. Appreciate it, guys. We'll let you go. Tim Seymour, David Seaberg, and there's much more coming up.
By the way, it's a good deal off of last year's lows. I was talking about the lows about the last 6 months.
Now you're shortening the time horizon, too. Our dash for Amazon series continues today. Up next, it's the battle in the Keystone State with Philly facing off against Pittsburgh and the fight for HQ2. Closing bell. We'll be right back.